Pocket Hours is brought to you by Scout Real Estate. At Scout, we're doing things differently with our focus on legendary service and creating a community of producing agents to spur each other on to do higher quality work while keeping the clients at the center. Come see how it feels to work with a small group of committed brokers with the shared goal of upping their game. For more info, please contact Jennifer Nelson, founder and owner of Scout, 206-227-7966 or jennifer@scoutrealestate.com. Hi folks, Jennifer Nelson here with Pocket Hours, and I am excited to introduce our guest on the show today. His name is Danny Meier. He is with Academy Mortgage, and I'm really excited for you to hear this interview today. He talks a lot about a work-life balance, which we're all struggling to find, and how with his 2 young children and the many, many loans he does every month, he continues to try to be present both for brokers and for his children and family. Danny does about 1,300 transactions per month. So this is one busy man, but he is incredibly attentive to the brokers that need help from him. And what else? Let's see. He also talks about the interest rates and appraisers and some other fun stuff. So I'm just excited to have him on the show. I think you're going to learn a lot. He's easy to listen to, and hopefully you'll have a chance to get to know him more and send him some biz. So folks, here's Danny Meier. I am so grateful for you being willing to be on Pocket Hours. Thank you so much. I appreciate your time. I know you are a busy man. And so thank you for being on the call. Yeah, good.
Thank you, Jennifer.
Yeah. So we're going to start off by just having people get to know you a little bit. So tell us a little bit about your personal life, whatever you're willing to share, kind of family, pets, all the fun stuff.
Well, I'm not great with dates, but I hope this works out. I've been married to my wife somewhere between 8 and 9 years.
Okay.
And it's either 12, 14, 13 or 12, 13, 14. So,
okay.
Yeah, happily married. We've got 2 children. One just turned 3, and the other's 5. They're both boys, Grant and Jet.
Right on. That's awesome. Yep. So if
Yeah.
she listens to this call and hears you kind of go between 8 and 9, is she going to be okay with that? Or is she going to be like, come on, Danny?
No, it's par for the course.
Okay. She knows what she got herself into. I got it.
She does. Yeah.
Excellent. And what brought you into lending? Danny, you're with Academy Mortgage, but what took you to Academy?
I got into the industry back in 2010, late 2010, so almost 12 years ago. And I was washed up from my last career and it was a pretty rough job market, if anyone remembers. 2010 was pretty brutal. But my mom was in the business. She had been in it for 30, 35 years, somewhere around that period. And was kind of done. And I just had lunch with her one day, and she was complaining about the lack of operations and processors out there because there was a refi boom, and she was incredibly busy. And I was like, "Oh, I could be your processor." She's like, "No, you can't process." I'm like, "I'm pretty sure I could process." And she's like, "No, you can't." And so I literally asked her 3 times, including her boss, for a job, and they all said no 3 times.
Brutal. Ouch.
Yeah, it's like once a week. I was like, can I have a job now? Because I'm tired of parking cars.
Okay. Is that what you were doing before, is parking cars?
No, well, I was playing baseball professionally before mortgage. And so in the off season, everyone had a job unless you were one of their first round picks. No one made enough money to get by. So park cars, teach baseball camps, coach lessons, work at a metal shop, metal fabrication. So I was metal fabrication from like 7 to 4, and then parking cars from like 5 to 9 was usually. Yeah, so I got in the mortgage business. I'm like, I don't have to be on my feet. I don't have to do anything. I can just sit at a computer and talk to people, sign me up.
Winner. Yeah, we'll take it. So baseball, I didn't know that about you. You were a baseball player.
Yeah. Yep. Had a short stint, a few years in the minor leagues. And then I got washed up. Like I said, one night I got off the bus and they said, "You're getting on the plane the next day. You're not going into the locker room." I said, "Okay."
The end. Okay. Moving on.
Yep. Happens fast.
It happened fast. So since 2010, have you been at Academy the whole time, Danny?
No, I was at MetLife Home Loans, then 4 months after I started there, the CEO got on the phone with every employee and said, "You're all done. We're moving on from mortgage." So we moved over to Home Street Bank. We all asked that CEO if he was ever going to get out of the mortgage industry, and he said no 4 times. And then 7 years later, he kicked us all to the curb.
Wow.
And so we went over to Homebridge, which was great company. And then I decided to make a move over to Academy. It was the only move I've made on that was my decision. So, but that was back in 2020.
Okay. So that must
Yeah.
feel empowering to have made that choice on your own and not be kicked to the curb.
Yeah, no, it was nice. Getting kicked to the curb is not fun, but I guess it won't be the last time. I know that.
That's how it goes, right? A little bit in the lending industry.
Yeah, well, any industry. It happened in baseball. I got kicked to the curb. So
Right. That's true. So tell me what draws you to lending? I mean, you got out of baseball, you've been doing lending now for 13 years. What do you like about it?
I think it's a great combination of sales, communication, finance. My degree's in finance, and lending is a weird sales job because it's one of the few sales jobs where you actually have to manufacture and sell the good. If you think about that, there's not a lot of industries where sales is doing the manufacturing. Usually there's a sales rep, and then there's somebody actually coming in that knows what they're talking about after the thing is sold. We have to sell it, and then we have to close it. We have to be the one that's in charge of the whole process. So,
Okay.
so it's a unique skill set. The combination of all those to do well. Yeah, and I just enjoy people. I enjoy being on the phone all day, and yeah, I get talked out though.
You get talked out. Oh yeah. I bet when you get home, you're like, no one talk to me. There's no talking at all.
Yeah, yep.
So you're a numbers guy. Would you say you're a numbers guy, or is that just you've picked it up since you've been doing lending?
No, I'm a numbers guy for sure.
Yeah.
Yeah.
It comes something you enjoy.
Not
That's
dates
cool.
though.
Not dates. Okay. All
Yeah.
right. So tell us a little bit. So you just kind of talked about what you like about lending. What are some of the bummer parts about your job? What are the parts you don't love?
The bummer parts are, well, I guess it's good and bad. I mean, you don't have any residual type relationships or income with clients. You do if you're fortunate that but they only need you once every 7 years generally. But I get to build up some good residual relationships with real estate agents like yourself. So I enjoy that part a lot. You get really close with people like yourself. But the bummer part is that there's no paycheck out there in July at this point. So you have to always be creating. You can't really rest on your laurels ever.
True.
So it's hard to take a break, and it's hard to stop. That's probably the biggest bummer I'd say is you can't really slow down momentum, or it stops entirely, in my opinion.
Okay.
And having a 2 and 5-year-old at home is probably the biggest challenge with that, is trying to mix everything into a healthy work-life balance.
Yep.
And just being less balanced, but
right.
lots of work and lots of life.
Yeah, I hear that. I have a 6-year-old, and the balance thing is a constant struggle, right? To try to be present with her and be present with my clients and get some me time, whatever that is, right?
Well, yeah, and be mentally present with your kids, not just physically there, but when there are issues or challenges at work, it's challenging because you care. I'm very, very emotional about my job, and I care deeply. And so when there's things that go wrong, it's really hard to be present, or when there's people mad at you or whatever, which seems to be normal these days.
Yeah. Yeah, for sure. Tell us a little bit. We're going to get into sort of some numbers and things like that about lending in a minute. But tell us a little bit about how you got to the production you're at. So Danny, you speak to us in lender terms. So I'm interviewing brokers so I can talk to them about volume, but what is a good lender doing every month in terms of like bringing home how many transactions or how many people are they helping? And then what does a productive lender kind of numbers look like?
Sure. That's a Great question. And nobody really looks at lenders. It's pretty interesting. It's very talked about in the real estate world, but I'd say your average loan officer closes about 1.5, 2 loans a month nationwide.
Okay.
So call it two, round
Okay.
up.
Okay.
Last year, I think I did just shy of 1,300 loans. So
Okay.
running at a little over 100 per month clip.
Wow. Wow.
Yeah.
Congratulations.
Thanks. Yeah. No,
That's
it
a
was
lot
a
of work.
lot.
Yeah.
Yeah.
Yeah. Thus the work-life balance thing comes back in, right? That's a
Yeah.
lot. That's a lot of
Work,
transactions.
work, office, work, office, work, office. Yep.
Yeah. Yep. Yeah.
Yeah.
Well, congrats. That's amazing. I know that you are a name that comes up often in my circles, and certainly you've helped me, and I know plenty of other brokers. Talk for a little bit about what's different about Academy or your sort of style that you think is why brokers keep sending their clients to you.
Sure. And part of the reason I did the move to Academy was the autonomy they allowed me to create. I've had this kind of vision for 3 years, 4 years about what I really wanted. And what I try to digest in any market is what are the challenges? What's going on? What are realtors struggling with? Why aren't clients getting homes? And then so I kind of worked backwards from that problem and just set up a system here at Academy. They allowed me to grow. We're at 27 staff right now. And but it allowed me to grow and really create a predictable process to an unpredictable type of market and process in general. Um, Setting up assurances for people was critical. I wanted to be able to tell people that they could take a risk safely and win an offer. And if you can get your clients bought into taking the necessary risks to win in this market and then do it fast and then
Mm-hmm.
never fail. I mean, we didn't have a single transaction that blew up last year.
Hmm.
So yeah, I think I had 2,800 pre-approvals done last year, and we only had one that we did have one blow up. One blew up, but it was the stroke of luck gave it to me that the transaction canceled for some reason that had nothing to do with me. So
Oh, okay.
I don't think anybody actually knew that the file blew up, but it blew up.
Well, that's
And
an
I
outlier. Yeah, we'll call that an
yeah
outlier.
yeah
Okay.
yep
And that is one thing that I know about you reputation wise. And for listeners that are, on the show, Danny at Academy has a way of really being able to respond quickly and be able to do fast closing and a pre-approval in a pretty short amount of time. And so in this market, I called it the bananas market, having a lender that can step up and kind of act quickly is really, really key to our success as brokers. So I
yeah.
appreciate that part of
And
what you do.
having standards too. I
Yeah.
have a very, very high standard for my clients, and it's all with their best interest in mind. But the reputation that we have here is what I care more about than any particular deal.
Sure.
Anybody that wants to rush through a pre-approval, if it's not going to work, and I don't take too many risks on deals that I don't have a firm idea of what's going on, because I want that listing agent to trust our letter, to trust me, and they do for that reason because they understand that nothing's gone wrong, and it's because of that high standard that we set up front early, often, and we tell everybody it's like, hey, if you're not pre-underwritten, then you don't get to make an offer with me.
Yeah, that's
Sorry.
great. Yeah. And I know, Danny, that recently even I called you on a deal that wasn't going very well for me with another lender and sort of gave you the 411 on it. And at the end of the call, you took the call, which I appreciated. And then at the end, you said, I don't think we can do much better. And
Yeah.
so stay where you're at. That's going to be a lot, less hassle. And so I just appreciated the fact that you took the call, number one. And two, you didn't really say, you should come over to me because you realized that you weren't really going to benefit either me or the client. And so that sort
Yeah.
of direction was really helpful.
Yeah. Yeah. Well, I mean, there's two classes of lenders right now. There's the big box, lender, the online folks, the banks, and then there's the local lenders, and the local lenders have a lot to lose. I mean, they have a reputation at risk, and they care. I mean, my reputation is only as good as agents think of it. I'm not going to take a chance on a one-off client that has missing pieces to their file.
Yeah.
Like all those other places they're all just doing one-off transactions, and they really don't care about their reputation in local markets.
Mm-hmm. Got it.
Yep. I
So
want my letter to separate the top 2 or 3 offers in a
yeah,
stack.
yeah, makes sense.
Mm-hmm.
So switching gears just for a minute, do you have something weird that's come up? I know you can't divulge names and I'm not asking you to do anything, but have you ever had sort of this situation where you're like, this is unbelievable in lending, that you could share with us just a quick, like, first thing that comes to your head that's strange?
Yeah, funny story. Um, I was reading through your questions this morning. I was like, this would work, I think. I, I was at the office on a weekend, I believe, and I got one call and then 2 calls. And the first call was, hey, we're in this house. We love it. We'd love to get pre-approved. And this was a long time ago. We'd love to get pre-approved. I said, great. So I started talking through everything. And then I'm like, well, what are you thinking you want to go to? And what's the address of the house? And they told me the address. And I'm like, oh shit, that's my house.
No way.
Yep, that's
And
my house.
what was your house on the market at the time?
Yes, they were standing in the house.
Oh
And
my
so
word.
I'm like, I need to go and I'll have somebody call you.
That's great.
So I hung up,
Oh, that's so good.
called my business partner, and he took it from there. This was,
Yeah.
I don't know how many years ago this was, but
Wild.
and then that afternoon I got another phone call. Hey, I want to get pre-approved. What's
No
the
way.
address? I said, what's the address? They told me the address. I'm like, that's my house. I can't talk to you.
I can't help you. Yes. And
Twice
do
in one day on a
that's
Saturday.
amazing. And did
Yeah.
either of those people buy your house? I want to know.
They both made offers, but
Didn't make it.
no, they didn't.
Okay. That's funny. Talk about
Yeah.
insider trading, right? We're none of that's going on.
I know. I felt bad for the first one because I was just going through my normal thing, just helping them out, and then I'm like,
Yeah.
oh, I
Wait.
didn't think about that.
Wait, that address sounds very familiar, right?
Yeah, I didn't tell them. I told the agents after I got
Okay.
off the phone, but I didn't tell the clients because that would have looked pretty poor on the agent side to directly
Right.
talk about what they need to do to
Yeah.
appease the seller when they're talking to the seller and they didn't realize
Talking to
it.
the seller, exactly, straight away.
Pocket Hours is brought to you by Scout Real Estate. Hi, I'm Jennifer Nelson, owner at Scout Real Estate. I started this firm with the vision of doing things differently, with our focus on legendary service for our clients and creating a community of producing agents to spur each other to do higher quality work. If you are interested in learning more about how a small group of like-minded brokers have come together to have some fun while doing a lot of business, reach out to me, 206-227-7966, or email jennifer@scoutrealestate.com. I promise you this, fun is a high priority for me, but so is winning. So if you appreciate those 2 things, you might be interested in Scout. Looking forward to hearing from you.
You've been doing this for a while now. You've watched interest rates shift and change and ebb and flow, and we're at a point, and you can help me with this, that we've gone up a little bit lately. But historically speaking, we're still pretty low. So talk to us a little bit about the rate and what's going on.
I mean, they've gone up about 2.5% since January, which is a pretty steep climb. I mean, the national average is somewhere in the mid 5s right now for a 30-year fixed. So I hate to use the long-term average too much because people also weren't paying 7 figures for a starter house in Seattle.
Yeah.
And it is relative. I mean, it's really eating at the affordability for people. And you listen to all these people. I remember when my first rate was 18%. I'm like, well, you also bought a house on Queen Anne for $170,000. So
Yep.
I don't think that's making first-time home buyers feel any better about the recent rise. But
Yep.
it does help their perspective when they've had those high rates before. We're also locally here in a market where debt to income ratios are still extremely low, even with interest rates in the mid 5s. So affordability hasn't become an issue yet, in my opinion, locally here.
Okay.
But eventually the national attention does draw on any market. But I do think we're still going up. We removed the largest purchaser of mortgage-backed securities in the Fed. I mean, they were purchasing billions, and they just stopped purchasing like entirely. So
Wow.
when the biggest buyer of an asset leaves a market, price goes up.
Yeah.
Rates go up. So
And why did they
price
leave?
goes down, rates go up. They were doing it temporarily. I mean, it was a thing that they started in March 2020. I mean, before that point, they weren't where they were, but yeah, I think we're just entering a market where rates should have been without their involvement, if that makes sense. So rates are buoying back up to where they should have been the whole time in an actual free, natural market.
Aside from people sort of messing with the economy to try to help it during a pandemic, this is where it would have been. Got it. Okay. And so you sort of expect it to stay here.
Yeah, I don't see the pressures that are causing the rates to go up to change. I mean, it's inflation. That's the root evil of all bonds. So I don't see the cost of gas going down. I don't see supply chain issues going away anytime soon. And those are two big relevant issues that are affecting rates. The other thing that's interesting too, I don't think the Fed is necessarily, I don't think they care so much about home buyers with rates. I think they care more about the overall economy. They're looking at it holistically, and what a lot of people aren't recognizing when they're like, rates will have to go back down or whatever. I'm like, no, they don't have to do anything actually. But if you look at the economy holistically, you've got a massive pool of renters that are being affected equally by this rise in home values. I mean, I just saw something that I think, was it Portland, went up with 30% year over year in rents.
Wow.
And I mean, when home values go up, rents go up. And when rents go up, I mean, you're not talking about your 760 credit score borrower with debt to income ratio of 20%. You're talking about a pool of people that might be spending every dollar that they make. And so the Fed is more interested in pumping more money back into their pockets because they spend 100% of their money. Whereas your purchaser rates go from 3 to 5.5, and they're still saving in their 401k, they're still stashing money away, they're still making it work just fine. There's really no reason. There's nothing has to happen with rates. They just get to move freely. So for that reason, I think they're still going up. I wouldn't be surprised if we see 7% at some point by the end of the year.
Okay. Tell me a little bit too. I remember there was I don't know how old it was, but when you were looking to buy a house, my dad and I talked about this, so this could be a while ago,
Sure.
but that sort of 30% of your income should be what you pay towards your mortgage or your rent. And that's just not the case, I think, for a lot of people now, especially in the Seattle market, that at least 50% of their income is going to go toward that mortgage. What are you seeing in terms of trend for that?
Yeah, the old adage is 32%. So your financial planning books will tell you that don't let 32% of your gross monthly income go, or more than 32% go towards housing, rent, or a home purchase. I think that, Fannie Mae and Freddie Mac will allow you to go up to a 50% debt to income ratio, assuming you have good credit. Rarely do I actually see people legitimately at 50%. Oftentimes it's because we're not able to count a new bonus or husband's 3 part-time jobs. Like, we just don't count it. So like, their real household income is a lot higher than oftentimes we give them credit for.
And tell me a little bit, how do you factor in the I'm not going to say the
RSUs?
Thank you. Yes.
Yeah, restricted stock units. We factor them in. So we still have things that work for the new sign-on bonuses with a lot of the companies around here, but it's limited. It's not going to be your best rate. But yeah, I mean, that's an example of Amazon forever capped out their income around 144,000 a year, and they just changed that. So you'd have these people that wanted to buy a $2.5 million house, and they had a base salary of 144,000, and then they'd make like $600,000 worth of RSUs every year. You better be able to use it if they want to qualify for that loan.
Totally. Well, and I
Yeah.
guess just in our market too, I mean, the amount of tech companies that are located here in Seattle and how they structure their salary and income and bonuses, being able to find a lender and a company that understands that is really crucial for people being able to, like you just said, I mean, I make 140 base, but legitimately I make $800,000 a year. I need a
Yes.
lender to be able to know, underwriters to be able to say, we see that as income and here now you can go buy this house. Yeah.
Hmm.
Important stuff. So switching gears, talk to me a little bit about appraisals. I think a question that comes up often for brokers is, are we seeing any shifts or trends, differences for appraisals with a multiple offer environment that we've been in for a while now? What are you seeing for appraisals, or have there been issues on your end with that?
No, I haven't had any issues. I have issues in other markets, like, I had a low appraisal in California last week. Haven't had any issues personally. I'm hearing about a lot of them, though. What we have done a good job on mitigating on that end is limiting the pool of appraisers that we work with, because I think a lot of companies get stuck with this 200 panel AMC appraisal management company, and you just get somebody on a bad day.
Totally.
I don't have that risk personally, but we'll see one eventually, I'm sure, but I haven't had any issues yet. Even in the height of crazy 2021, and then January of this year was rough. But there's always new issues related to appraisals that you hear about. I just heard about one last week that I frankly hadn't even heard about yet, but it was something about in order to use the square footage of a basement needed to be like substantially you have to be able to substantially use it, and ceilings had to be a certain height. Like, well, that's going to be a problem in a lot of those small West Seattle bungalows.
For sure. Yeah,
Mm-hmm.
absolutely.
But it's all very subjective. That's the bottom line.
Yep,
so
exactly.
Their job is extremely subjective. So
for sure. Yes. And in the past, it used to be that we could get a Puyallup appraiser coming in to work, something in downtown Seattle. And I think a lot of that shifted away where we can get hopefully local people that understand our market to come in. I haven't had a lot of appraisal issues for a long time.
That's where you're going to have a lot of your issues. I mean, those large appraisal management companies, it just goes out into a blind rotation. And
right.
So if the person from Puyallup gets his eyeballs on it first, they might be taking the job.
Yep.
And then you're explaining them to them what a airspace condo is in the back of somebody's alley all of a sudden. And
exactly. Yeah, I mean, honestly, it is. And I wish Puyallup people could do Puyallup and Seattle people could do Seattle, but certainly when we use these larger companies, that's what goes down.
And we never talk about this on the other end, but we're always so obsessed with the Seattle market. But there's random struggles that other appraisers are good at too, like
for sure.
like a random leased land or flood zones. Like there's all sorts of issues that don't exist here locally, but we have our own unique set of problems.
It's true. I had a manufactured home that I sold a while back, and that's a whole different deal as well, right? Having the right person to do that. So,
yep.
Okay. So let's, moving forward just a little bit, if you were to give advice to newer brokers that are just starting real estate, so in the first 3 years, what would you tell them in terms of finding a good lender and some pitfalls to avoid so that they can establish a good relationship with a lender?
Advice on finding a lender, you mean?
Yeah. Like what to look for. I mean, obviously you're going to describe yourself a little bit, but people creating that relationship with a lender is pretty important early on in your career.
Yeah, I agree. I think that getting referrals from people in your office is probably the best place to start. Mm-hmm. And making sure that you can get along with them is critical. And then, I mean, a lot of the referral is going to vouch for itself, obviously, but making sure that someone's accessible. I tell people all the time, I mean, real estate happens on the nights and weekends, so you have to be available.
Yep.
And try them, make sure that they're available. And be cautious about the people that can spend too much time with you, because if you're only doing 1 or 2 loans a month, then you really don't have a good grasp on what's happening with files. You might not seek, or you might not find issues that others would. So making sure that you're working, it's kind of a weird combo. You want them to be busy enough, but not to the point where they're not returning your phone calls, kind of thing.
Right. I think it's so important. You just said something. I'm going to restate it just for our listeners, that asking other professionals in your industry, right? Other brokers, and saying, who are you working with and why did you choose them, is super important. I mean, this is a Lone Ranger business, but it doesn't have to be in that respect, right? There's an opportunity for you to say, hey, here's someone I respect who does a lot of business. I wonder who their lender is, or one of their top lenders is.
Yeah.
And that's actually how I met you. Danny was a referral from another broker who said, you should give Danny a try over at Academy. He's great. And so, right, that's how that works for them. Yeah.
I'm happy you did. Yeah. And right now, I mean, you're probably getting bombarded with calls from lenders.
Yeah.
Every agent is, because refis went away. There's no homes for sale. So you have loan officers that are going to be literally leaving the industry in 6 months. So, you know, and everyone's getting the same advice from their managers on the loan side. Call 40 agents a week. Call 40 agents on Monday. Call them on Tuesday. Call them the next week. Just call.
Yeah.
And like, they're not actually working on loans. They're not working with consumers. They're just trying to get the attention of realtors. And so I said that for the new agents, be wary of anyone that's giving you 3 or 4 calls a month, because it's like,
yeah.
No one else is working with you. What's wrong?
Yeah, there you go. Good question. So in terms of an offer that you receive, are there any things that you say, agents, please stop doing this? As a lender, are there any parts of offers that you say, this is a great thing to do, or this is something, kind of a pet peeve of yours with brokers that you see them doing in offers?
Oh, good question.
This is off script, Danny, so sorry about that. This wasn't part of the questions I sent you, but now that we're rolling.
That's fine.
Okay.
You know, I'd be careful about leaning too hard on your, and this is more of a liability thing, but leaning too hard on your lender for waiving certain contingencies. That is ultimately the client's decision. And I just learned this actually earlier this year, that I don't think lenders are actually legally allowed to give that advice. So it could get you into hot water, because everyone asks the opinion. Like, my opinion is that they'll be just fine. So just be careful that the clients that actually understand what that means. I spend a lot of time with my clients coaching them from the beginning, from the first phone call. We talk about it, getting the permission from the lenders, of course, necessary, but don't just make it their decision either. Does that make sense?
It does. Yeah. I think what you're referring to, and for our listeners, it's when in a multiple offer situation, when your buyer, and you're representing a buyer broker, is saying, it looks like in order to be competitive, waiving financing, giving up some of our earnest money as immediately released to the seller, etc. But let's just stick with waiving financing, is one way to be competitive in this multiple offer situation. And oftentimes what I do is call and say, it might be worth it for you to call your lender and say, how confident are you, lender, that if we waive this, that we're far enough along in the process, and or your professional opinion of, after looking at our assets, etc., make that a wise choice. And it sounds like what you're saying is that you can say, based on what I'm seeing, I think you're a strong buyer.
Right.
But ultimately that this is in fact the buyer's decision to waive that financing.
And the agent they're allowed to discuss that with their clients, but technically I'm not able to give that advice to tell people what to do.
Sure. And hopefully,
and oftentimes it's like the agent will just sidestep, and they'll just kind of back up, and it's all of a sudden like all on me. Granted, I'm the one doing the loan, but it's ultimately not my, I'm not allowed to. It's kind of a weird place, because I wish that we were allowed to formally, but technically we should not be. Just like we can't write contracts.
Right. And again, for folks listening, just a word to the wise, brokers, neither are you supposed to be advising in this regard. I think the information needs to be provided to your buyer, and then ultimately, and in writing, hopefully they get to say, we are choosing to waive financing of our own volition, right? You've given us sort of the climate and the situation, what's happening out here in multiple offer land. So that's great. That's great. Danny, what else do you want people to know before we finish up our call today, just about you or Academy Mortgage or anything else?
I'm an open book, so reach
Okay.
out anytime. Just share my contact info, and always available. So would love to hear from anyone else.
Awesome. Well, thank you again for your time. I took notes, just so you know, I learn something every time I interview, and I appreciate what you had to say today. And
thank you, Jennifer. Thanks for having me on.
Yeah, you bet. And we'll talk soon.
Okay. All right. Talk to you later.
Thank you so much for listening in to Pocket Hours. I hope this has been interesting, fun, made you laugh, made you think, spurred you on to do and implement some new things in your business. I appreciate your time and hope this has been a good use of it, period. Now, go be the agent you would hire.